I'm Randy Little with 52 Funds, and you're watching Taking Stock.
Counting down to the close, everyone. It is Wednesday, March 25th. This is Taking Stock. I'm Kristen Scholler, live on the floor of the New York Stock Exchange. We got a lot of news moving the markets today. What began as escalation fears turned into a relief trade. In fact, reports of a 15-point U.S. peace plan for Iran are lifting sentiment, with major indices in the green, and Brent crude oil falling back below $100 a barrel. Now, while oil cools, chips are heating up. AMD and Intel surging on reports of price hikes, a sign that in an AI-driven economy, pricing at power is everything. So what levels matter now, and can this rally hold? Well, our market expert, Jay Woods, is going to join us first to break down the technical setup, including where the S&P 500 stands relative to its 200-day moving average. And then American Waters. Cheryl Norton is going to join after ringing the closing bell to discuss a $1 trillion water challenge. And Money 2020, Scarlett Seaver is going to sit down with Mary Ellen Iskandarian of Women's World Banking. Finally, we'll bring you full coverage from the Blockworks Digital Asset Summit right here in New York City. DAS for short, a lot of action in that space, of course, as we await that particular interview. You hear the cheers? Time now for that closing bell. American Water doing the honors, of course, for today as we round out trading. 4 o'clock is here. Let's take a look at that bell podium. All right, round of applause there. You got to give it up for them. That was a great finish. Let's take a look at the tape to see how we finish this session. The S&P 500 ending up 0.5%. Jay Woods will break it down here in just a moment. The Dow Jones Industrial Average, for its part, up 0.7%. The NYSE Composite also higher by 0.7%. The Russell 2000, the small caps, getting a bump up 1.2%, leading the way today. And now to make sense of this market, I do want to bring in Jay Woods. He's a chief market strategist at Freedom Capital Markets. Jay, great to see you on this Wednesday.
Great to be here. Yeah, kind of a non-volatile day, not what you suspect, you know?
You know, after 4 down weeks, I think this has got to feel good for some traders. Is that right?
I think a relief is what the word is, as we are having a relief rally, but we continue to monitor what's going on in the world because it's a slow week, and yeah, a little bounce back from that Friday low was what we needed. We've gotten it, but we haven't gotten back to levels where we feel all is clear.
Yeah. Okay, so what are the levels that you're watching, as choppiness could very well remain in this market?
Yeah, this market has methodically gone step by step lower. We've never had that real washout. We thought we were having that on Friday. So that Friday low, just under 6,500, we'll keep it around 6,500, that should be the new floor. We don't want to see a retest of that. If we do, we want to see it hold. We want to see support. But it's that way back up. We talked about this line in the sand, well, imaginary line in the sand, the 200-day moving average at 66.30. The average broke below that, the S&P 500, for the first time in 214 days. So that trend is breaking, if not broken. If we can't recapture that line in the sand, that 66.30 level, get back above the 200-day moving average, something the traders watch very feverishly here, then this market could be heading a lot lower.
Okay, so obviously the levels matter. You follow those, watching the chart patterns. That is, it seems to be a headline-driven market. What headlines matter here in deciding the next move?
Yeah, it's all about oil. I mean, anything that comes out of the Strait of Hormuz, we get tankers flowing through there safely, then you're going to see oil prices come down and equity prices rise. But right now, what we've seen in the yields in the 10-year spike above 4.4%, that was a little extreme, and now equity's starting to take a nosedive, holding up for now. But if the war continues, we go boots on the ground, we may get another leg lower, and it could happen quickly.
Okay, so energy very much is in focus still.
Yeah.
Other sectors that you're watching, is there any sort of rotation happening here?
Yeah, there is a rotation, but it's not the rotation you want to see. Obviously, the energy sector is doing well. Materials, the XLB, That had a nice little run into this. It's starting to recover. Why? A lot of fertilizer stocks, the MOO, great ETF, MOO, that has been doing well. That's a good place to go during these turbulent times. And then the staples are probably going to catch another bid. They've been beaten down, but it's a good, safe place to put your money. And then lastly, I'll give you one, Pfizer. That stock is breaking out, 6% dividend. Yes, COVID's over, but the stock is finally turning around, and it's a good place to be in turbulent times.
What are the data points that matter? You know, there's a lot of concern that the data is going to start changing based on what we've seen now, the fourth week, coming to the end of the fourth week of this war in Iran.
Yeah, that's the million-dollar question. All right, so with the price of crude going up, that's more for you and I at the pump, the biggest tax on the American consumer. That has not come through in the inflationary data in the CPI, the PPI, so we've got to see how that affects things. Is it transitory, the word that they don't like to use, or is this going to be a deeper hit to the economy? Because when the consumer starts paying more at the pump, they're going to pull back in other discretionary forms. So consumer discretionary names, travel and leisure names, we may see people start to pull back. Right now, we haven't seen it. Airlines still doing well, but it is something to watch. And then next week, unemployment. Unemployment continues to remain elevated. If it ticks up, then we're going to have rising unemployment, rising inflation, and growth slows, then we're talking stagflation, and that could be a problem.
So I think we only have like 20 seconds left,
Sure.
Jay, but now this complicates the rate outlook, right?
Oh, without a doubt. We're going to watch the Fed's rate decision. The dot plot, if you will, was for really no more cuts. Maybe one cut as a new Fed chair takes over. But when the Fed meets in 5 more weeks, we don't expect any rate cuts. We may be talking rate hikes. Hopefully I'm wrong.
Yeah, we'll wait to see how all that data plays out.
Yeah.
Jay Woods, thank you as always.
Thank you.
All right, Jay Woods there, Freedom Capital Markets. Thank you so much for joining. Now, yesterday, FinTech TV lead anchor Remy Blair sat down with Santiago Roel Santos of Inversion at the Blockworks Digital Asset Summit 2026 right here in New York to talk about the latest in the world of digital assets. Let's take a look.
Well, joining me live to break all of this down is Santiago Roel Santos, founder and CEO of Inversion Capital. Great to have you here. Thank you so much for joining me.
Thanks, Remy. Good to be here.
Well, it is quite a time as this Digital Asset Summit gets underway here in New York City. So where do you think we are when it comes to the crypto cycle?
I would say there's a divergence of there's a lot of adoption happening. In fact, public companies like Visa, like MasterCard, Coinbase, Robinhood, they're adopting crypto because they see the opportunity in the same way that they see AI. Um, Token prices are a different story, and tokens are just generally uninvestable. They don't capture much value. They don't behave like securities. And I think investors have caught on to that. And that is probably the biggest theme of this cycle, which is you're better off investing in the public market that is appreciating the technology for what it is. And it has less risk. It has more execution. Most of these are founder-led companies. So the risk reward is just not there to go out and invest in your DeFi token, in your L1. Most of these are very overvalued. And the risk reward is just much better in the public markets.
Yeah, and Santiago, I think that distinction is very important when we're talking about digital assets as well as crypto. And given that we are continuing to monitor geopolitical tensions in the Middle East, I do want to get your take on Hyperliquid and that volume we saw as the conflict got underway, especially since we're seeing a lot of activity on the weekends.
Yeah. Hyperliquid, since HIP 3 got implemented, allowing to trade tokenized commodities, it's been an explosion of interest. I was sitting over the weekend when the war broke out, sitting with a lot of macro hedge fund guys, and they were all discussing what the open's going to be on Monday. And said, "Have you looked at Hyperliquid?" And they were blown away. The only time I felt that was with stablecoins. That was over 6 years ago, where traditional people would say, "Wait a minute, I understand what this technology is all about. I don't want to go out and send a wire transfer because the stablecoin just does that much better." And I think it's going to continue to proliferate. It is explosive, more so because it's attracting a lot of users to come and use Hyperliquid. I think there's now over $1 billion of open interest. I think that 10x or 100x over the next 5 years.
Yeah, and Santiago, I think that is really significant because sometimes when we're talking about these technologies, it's about the use case here. So as we head into the rest of 2026, there are a lot of expectations. And when we're talking about what institutions are doing, how do you think all of this is going to shake out?
I think stablecoins as a just-in-time money transfer is going to be a massive theme.
Hmm.
You had Western Union here today talk about it. It's a company that I followed and have always wondered why they haven't implemented stablecoins. When you think about what stablecoin does, every business is going to use stablecoins over the next 10 years. Um, any business, like, 40% of the S&P is trading internationally. Well, the stablecoin fits a very clear use case for that type of business. And I think that's going to continue to be a theme, regardless of where rates are, regardless of whether there's geopolitical tension or not. This is a very much a secular trend. And businesses are really waking up to that idea. So I think that bodes well for crypto. That doesn't mean that your token price of Ethereum or Solana or some of the other networks are going to benefit. There's a lot of competition in the stablecoin space. Like if you're a stablecoin issuer, there's now 10, 20 of them.
Yeah.
And so, fee compression is real. But companies that own distribution, that have a relationship with the end customer, the end state of this technology is the end customer doesn't realize that money's moving in real time. They just see a lower rate, they see their money faster, they see approval faster. The best example of this is Figure in the public markets.
Well, Santiago, we will have to leave it there, but thank you so much for joining me today as the Digital Asset Summit kicks off. And thank you so much for all of your perspective.
That's right.
All right, everyone, we are down here on the trading floor. You are watching Taking the Stock, and joining me now is Cheryl Norton, Executive Vice President and Chief Operating Officer at American Water. You saw her on that Bell podium earlier. Cheryl, welcome.
Thank you, Kristen.
Yeah, great to have you here at the New York Stock Exchange today. What was it like to ring the bell on this big day?
It was so exciting. We were just thrilled to be there. I had my whole team there, and it was an amazing experience.
What does World Water Day mean to you?
World Water Day is so important. It's celebrated, it was created by the UN to really talk about the lack of water across the globe. There are about 2 billion people across the globe that don't have access to clean, safe water. And so it's really important to us as a water utility. We try to provide clean, safe water to as many people we can across the U.S.
And am I reading this correctly? It is your 140th anniversary?
That's correct. And
Wow.
140 years of providing solutions to the communities that we serve just makes me so proud.
Wow. In terms of what you've seen evolve over the past 140 years, what stands out to you?
You know, it's been watching the industry evolve. When I first came to the industry, there were hardly any women in the industry, for one. But we've made so many investments across the systems because the systems are failing. The American Society of Civil Engineers have given us a report card, and for the water industry in general, they gave them a C- and a D+ for wastewater. So the infrastructure needs a lot of investment, and it's only getting worse. And so for me, it's really important that utilities across the footprint of the U.S. continue to make those significant investments. And we invest billions of dollars each year, more than $3.5 billion this year, to make sure that our infrastructure is sound and good and sustainable.
What are the specific infrastructure changes that need to happen to improve this? I mean, scores of C&D doesn't really get much worse than that.
Right. Yeah, it's the infrastructure changes that need to happen is that there needs to be routine, planned, proactive investments instead of just reacting to what's happening. So when a system has a main break or you have a sewer issue in a system, you don't want to have to react to that. It's a lot more costly to fix those, to repair those, than it would be to proactively invest. And so we're always trying to look ahead and prioritize where we think we could have the next failure and get ahead of that so that we can do it more efficiently and also make sure that our customers have the service that they deserve.
Yeah. Talk to me more about your customer base and how an average consumer watching this show would see this play out.
You know, a consumer that doesn't have good, strong infrastructure might wake up one morning and not have water. They may struggle to get to work each day if they have main breaks that shut down roads and things like that. But if you have a system that's got strong infrastructure, it impacts all the infrastructure across that system. So it's the roads, it's your ability to go to work, it's your ability to eat at a restaurant or cook at your house. And we want to make sure that our customers don't have those disruptions to their daily lives. And if they do, we want to make sure that we take care of that as quickly as possible.
Yeah, 140 years is a lot to celebrate. You've been doing this for decades as well, is that right?
I have been, yes. I've been in the industry about 40 years.
Congratulations.
Thank you.
What does the future look like to you?
The future looks like to me more growth across the business. It's such a fragmented industry. There are about 53,000 water utilities across the U.S., and so that's not a very efficient way to do business. So I see more regionalization, more growth for our company across the U.S., but I also see the regulations continue to evolve, and that makes it more and more challenging for utilities to make sure that we're providing clean, safe water. So more research will happen, I think more investments on the treatment side, and I just think it's going to continue to evolve, and it's going to take a high level of expertise, which is exactly what we bring to the table. I'm so proud of the team that I have that has such extensive expertise. It's what we do, and so we focus only on water and wastewater, and we're really excited about that.
Cheryl, congratulations again, and thank you so much for joining us.
Thank you. I appreciate it.
Yeah. All right, Cheryl Norton there, Executive Vice President and Chief Operating Officer at American Water. All right, everyone, well, stay with us because we're going to have much more on the other side of this short break.
Welcome to FinTech TV. In a global market that never sleeps, the idea of waiting days for your dollars to settle feels like a relic of the past. Well, Kraken recently became the first digital asset firm to secure direct access to the Fed Reserve's payment network. At the same time, they are rolling out instant 365-day dollar withdrawals and plugging their OTC liquidity directly into ICE Chat. Well, joining me here at Digital Asset Summit 2026 in New York City is Gurpreet Oberoi, Head of Institutional of Kraken. Great to have you here. Thank you so much for joining me.
Thanks for having me.
Well, Digital Asset Summit 2026 is well underway here in New York City, and 2026 has been quite the year so far. So give us your take on institutional adoption and what we're actually seeing on the ground.
We're seeing every institution in the past 5 years. It was exploratory, sandbox, nice to have. Now every institution, whether it's asset managers, global banks in Europe, US, Middle East, Asia, everybody's having a digital asset strategy. And they're looking at their rails and how to use blockchain to expedite each of the frameworks, how they actually operate their business.
Yeah, and of course, when we're looking at digital assets as an asset class itself, where do you think we are? What do you think institutions are thinking when it comes to crypto?
They look at crypto as a multifold. They look at it as any asset that has a large capital markets, large options, large derivatives. It's like any commodity. It's a part of your portfolio. So traditional financial institutions are seeing the digital asset firms take a lot of their clients. If you look at what the largest revenue generator for banks today is, wealth management, and when a lot of their wealth clients park their assets in digital assets, they're taking money off their platform. So every asset manager, bank, it has to have their own digital asset strategy where they can offer these same products. And so we're seeing that shift happening in real time, whether it's Morgan Stanley launching their own ETFs for Ethereum and Bitcoin. You're seeing that across each of the banks having a way to offer their clients exposure to digital assets. So that's one. Second is using the rails for stablecoins across payments internally and externally. So they're exploring how to use instant settlements, which stablecoins allow, versus a traditional SWIFT system.
Yeah, and while we're talking about trends and institutional adoption, I do want to ask you about tokenization.
Yeah.
So do you think 2026 is the year that not just the narrative itself, but tokenization actually becomes a reality, and why?
So tokenization is multifold. So tokenization is, I look at 2026 as what like maybe 2019, 2020 was for stablecoins. Like nobody knew what stablecoins were. Like, why would you need a digital dollar when you can have the real dollar, right? And now it's a 300 billion plus asset class. We're seeing the same thing for tokenization right now, where traditional firms will look at digital asset firms as distribution partners. So what that means, if you're an Apollo, you're Carlyle, you're a Fortress, et cetera, you can build products where you can distribute to the stablecoin holders that own $300 billion, right? So tokenization allows for liquidity, instant settlements across right now stablecoins, but with other financial products like bonds, credit, private stocks. So you're seeing institutions seeing this trend happening, and they want to make sure they can also earn fees and put their own products and their own funds on chain.
Yeah, and I'm sure that you've been having plenty of conversations with stakeholders. And when we take a step back and look at Q1 2026, as well as what has changed in the digital asset landscape in the past year as well, how has the conversation changed compared to the beginning of, say, last year to where we are now?
It's more of a partnership approach. I think 2025, it was maybe we can do it ourselves, explore it. Now 2026 is, we have to have this roadmap in. We spend a lot of time, a lot of money, and now our board is saying to implement it immediately. So I think the long time frames are not going to be sufficient anymore for these large firms, and they'll need to figure out how to partner and build fast.
Well, Gurpreet, it was great talking to you here at DAS. Thank you so much for your time, and thank you for your perspective.
Thanks for having me.
Hi, I'm Scarlett Sieber from Money 2020, and I have a great guest with us today. We have Mary Ellen Iskandarian, who is the CEO of Women's World Banking. Mary Ellen, welcome to Take a Stock.
Nice to see you.
Nice to see you. It's so funny. We were talking off camera. First of all, you are our Diamond President, which is the most prestigious category at the Money Awards. And I was really sitting back and thinking with the team about someone who embodied transformative work and transformative impact. And literally, I was sitting there and Mary Ellen came into my head. So you're here, which we're so excited about you joining us. Now, I guess my question for you is, we haven't, the awards have not happened yet. Entries are just starting. But when you're sitting here and thinking about work that has transformative impact, what are you going to be looking for as the president?
So, first of all, thank you for those lovely words. And I hope that myself and the jury can live up to them. Um, I guess I was particularly grateful to the Money 2020 Awards for choosing me for this panel because the way I'm viewing it as it's not just innovation, it's not just change, it's transformative change. Are we thinking differently about financial services? Who gets to use them? How do we change behavior at scale? I think we're looking for some pretty profound movement by virtue of the project, the initiative. I mean, I think that's one of the more interesting things about the category as well. Startup fintechs can apply, full-fledged banks can apply. It's really about looking for transformative change, great ideas that can really change the way we think about financial services.
And that what you say is so true. If I even think about the winners from last year, you had everything from Fiserv stablecoin product to Project Nemo, which is really about making banking and financial services more accessible for those who have disabilities, which is just incredible. Now, as an ex-CIO, innovation can be quite hard to measure. And trust me, the rooms that I've been in around getting KPIs takes energy. So you could talk about the technology, you could talk about the revenue, you could talk about the impact, but as you're thinking about people who are going to be submitting for this category, what advice would you have when they think about what success looks like?
So, so glad that you talked about how hard it is to pin down what is impact. So I would really encourage anybody that's submitting to think big, but also think data, think backup, think being able to prove impact against whatever metrics that you can show, um, solid support for. But I think the whole purpose behind this award category is transformative. Whose life was changed? Who was perhaps left out of the financial sector? I loved you talk about Project Nemo, financial services for the disabled, and traditionally excluded population everywhere in the world. So bringing financial services to them is a really transformative big idea. And I'd love it if my jury this year could equal that success.
That makes me so excited, and I cannot wait to see where we get to for that. And when I sit back and think about the work and impact that you've had and that Women World's Baking has had, been around for over 40 years. You've been CEO for 20 of those years, which is incredible. I'd love to get your perspective, maybe a bit retrospectively, about where have you seen you've done so much great work on really trying to help these, inequities, especially for women. Where have you seen the biggest progress and where do you think we have opportunities still? Like, where's the biggest opportunity still?
So I'm very excited that we're no longer talking about like women's finance for women equals microfinance. You may have seen, I wrote a book a few years ago. There's nothing micro about 1 billion women. And I still very much believe that. Also am delighted that we no longer think inclusion just means having a bank account. It means a much broader array of services, but it also means, and this is where I think there's great opportunity for growth, just because somebody has access to something doesn't mean they're comfortable using it, that they trust the financial service provider to use it. So Women's World Banking has really doubled down on making sure that financial and digital literacy is baked into any product solution that we're behind. But we recognize the trust gap is enormous, really, for anyone entering financial services, maybe even for the first time, but doubly important for women.
Well, Mary Ellen, we are so honored that you're going to be part of the jury. We cannot wait to have you there. Thank you so much. This was Mary Ellen Iskandarian, CEO of Women's World Banking, and she'll be on the jury for the Diamond Award.
Welcome back, everyone. That's just going to about do it for today's show of Taking Stock, live down here on the trading floor of the New York Stock Exchange. You do want to tune in tomorrow morning. Ashley Masternardi and FinTech TV's Market Movers are going to have you covered at 9 a.m. Eastern, counting you down to that opening bell at 9:30 a.m. That's going to do it for today. Stocks up fractionally at the close.